talk about those things relative to the MI, the approval process, and training and education for your buyers, as well as tools and resources that you and realtors can use to help to promote the program to your buyers so that when your buyer comes and says, I'm ready to buy, you've already helped them to get to that next step, meaning they've got their education, they know how the program's going to work, and they're ready to go. Now, how do we design this program? Well, actually, this program came as a design out of feedback from many realtors like yourself, many other consumers and constituents and previous home buyers that said to us, well, these are the challenges to home ownership. No one goes into home ownership with the intent of failing. Everyone that owns a home wants to keep that home. They don't want to go into foreclosure. They don't want to have to short sell their home. Their goal when they buy a home is to have a home. And we want to make sure that. So what we did was worked with many leaders from across the country, taking into consideration many of the things and the information, the impact and feedback that we've received from you and others on how to make sure that borrowers were going to be able to not only buy a home, get a mortgage, but succeed at home ownership. Some of the enhanced simplicity, underwrite with confidence. One of the things in the past, when you're delivering a loan to Fannie Mae, the loans are delivered into a system called DU, Desktop Underwriting. Oftentimes, a lender could actually choose another program. And let me just say this, Home Ready is just one suite of a product options that are available at Fannie Mae. So let's say that a lender decides, I'm going to offer Fannie Mae 97. They're not as familiar with Home Ready. Well, when they put the loan into the system, what we've done as one of the enhancements is now the system will tell that agent, this borrower is eligible for Home Ready. What does that do to help the consumer? First of all, it lets that consumer and that loan officer know that there may be a better, more affordable lending option for that buyer. They then, for example, have the option then to say, I'm going to go ahead and change it from this program to Home Ready. That's something that DU didn't do in the past. Before, you picked the program, you entered the information, you never knew through the system unless you knew something about every single program, whether or not that one was going to work. So that's going to be a great tool. It's also going to help, in my opinion, oftentimes, have you ever had a borrower come back to you after they're in their home and, they get to talking with neighbors, get to talking with friends, and they say, well, Joe down the hall told me I should have been able to have gotten this loan. I should have been able to get that loan. Then they're questioning whether or not they got the best product. One of the things that this will do is this will flag for the lender why this product may be more suitable to that borrower, which I think is huge. So that way, they can go in and take a look at the parameters, look at the approval, look at those things and decide, yes, this is better. Because what does that program do? It provides for better pricing, and it also has a provision with regards to MI that allows for the mortgage insurance at some point to be removed. Now, I mention that because, and that is critically important. The borrower at the close or prior to the close of escrow must decide which type of MI insurance they're going to take. Whether they're going to take the mortgage insurance that stays with it for the life of the loan, meaning until they refinance it, until they sell the home, or they can pick the option that allows them, once the property reaches a loan-to-value of less than 78% loan-to-value, for them to go to the lender and to request that that be removed. Good idea, especially for those that are planning to stay in the home. They've got a good rate. How frustrating is it when your borrower has a great rate, but they've got MI, and the only way they can get rid of that MI is to refinance. Home Ready provides that solution and that option. So that's something that's really, really important, just to remember that. Standard risk-based pricing. For example, it's looking at scores of as low as 680. We adjust the loan level price adjustment caps to 150 basis points. It's a simple execution. Low down payment, up to 97% financing for home purchases with borrower flexibilities. And let's talk about those flexibilities. The flexibilities are the sources of fund. Of the 3% down, all of it or a portion of it can be a gift, including the use of down payment assistance and community seconds funds. It's conventional home financing. It has cancelable MI, which I talked about earlier, and it does require home buyer education. I'm going to talk about that a little bit more. But one of the things about the home buyer education is the borrower can now take it online through frameworks, and I'll talk about a little bit about that as well. Okay, there are no income limits on borrowers that buy in census tracts on certain census tracts. It's 180% as well as 80%. In the past, you may have known that Fannie Mae had programs, for example, that had no income limits or restrictions on them over. The programs, as you see them today, for example, fit within the general guidelines for CRA. So, for example, it's available in those census tracts where there are no income limits, and those census tracts that are based at 100% of AMI, and those at 80. I'm going to show you and give you a tool here that you'll leave with today that will allow you to pull that information for yourself and track. That'll be the first step in knowing, is this property going to fit within Home Ready, and what are the parameters? Is there no income? Is it up to 100% of area median income? Is it up to 80% of AMI? DU automatically identifies the potential loans. I talked about that earlier, meaning that the loan officer inputs it into the system. It's going to flag it. It's going to tell them right then and there if it is eligible for Home Ready. It is still incumbent upon that loan officer to then convert that loan to the Home Ready provision. But he would have to think hard and fast because the MI coverage cost is lower, the loan level price adjustment costs are lower. Why would you not give that product to your borrower, which is going to save them money and potentially lower their mortgage costs for the life of the loan? Okay, a couple other things. The innovations, we're going to talk about those a little bit more, allows for non-owner occupant borrowers, meaning that a parent or a non-relative can actually go on the mortgage if they're choosing to do so to help buy the home, and we'll talk about how that'll work. It will permit rental income, and we're talking rental income in a single-family residence. We're also looking at including income that comes from accessory units. Also, it will allow for border income. Because these things are so important, there are some slides that I want to show you as well. Financing up to 97%. Low MI allows for non-traditional credit. If, for example, you have a borrower that does not have traditional credit, one of the things that we want to ask you to do is to go back. Let's see what happened here. Yeah, I think so. Just give it up. Okay, there we go. Much better. Here we are. Allows non-occupant borrowers such as a parent. Also, the person does not have to be a parent to go on the loan. Permits rental income. Allows for border income and documentation flexibilities. Financing for up to 97%. Low MI standards. Non-traditional credit. is acceptable. If you have borrowers, for example, and you're talking to them and they say, I don't have a lot of credit, one of the things that I will ask you to do is I want you to go to the Fannie Mae website and look at the guide and the criteria with regards to building a credit history for them based upon that non-traditional credit profile. So simply, a borrower simply not having credit does not mean that they will not be eligible for the Home Ready program. That just means you've got to do a little bit more work and you've got to help them to build that credit history. Gifts, grants, community seconds. How many of you in the audience actually work with or use down payment assistance programs or have to help your buyers? Okay, I see a couple of hands over there. You can use those programs with Home Ready as well. Now, in some instances, those programs that you're using to help that buyer may have specific guidelines with regards to their education. If they say, as an example, we require that borrower to have face-to-face counseling training with AB Counseling Agency here in San Gabriel Valley, that is the homebuyer education counseling agency you should use. We are not requiring that they use the frameworks training platform and then go and get that face-to-face training. They simply use the one based upon the down payment assistance program because we want to make it easy. Now, I would still, however, encourage borrowers to go and sign up for the frameworks training because what it does is it's going to allow them to take it in a course way that can answer questions that can also take a lot of stress off of the things that you may hear from that first-time buyer that is uncertain. It answers a lot of things. Additionally, the training that they can take online, they can also take on, and I'll grab her phone here. You know how many of us are so busy today? They can actually take the counseling on their phone. So if they're busy, it's 9 modules. They can take a module at a time. They can do it all in one day, or they can do it over their own time. It's really completely up to them. So I think that's a huge benefit with regards to education and knowing how buyers buy today. Now, this talks about the post-education. Borrowers, for example, talked about frameworks. Borrowers, for example, it's a comprehensive homeownership education. It's an online course. The course, the borrower will invest anywhere from 4 to 6 hours, depending upon how long or how quickly they can take the course. There is a fee for them to take the online education course through frameworks. That fee is $75. But what it also does is from the time that the borrower takes that education, they then, for example, have assistance for as long as they hold that mortgage. The borrower gets into a bit of trouble. Just as an example, they lived in the home for a year. They've had a problem go wrong, and they're going to be late. This is the first time they've owned a home. They're not quite sure what to do. They don't know when they're going to be able to get caught up. They can actually call the counselor back at Frameworks and say, I went through education. I would like some help on knowing what to do. So this way, it allows them to be able to address the issue early on and get that face-to-face or live, I should say, live is a better way to describe it, live support with regards to helping them through. And if, for example, they ever want to go back and do the training again or they have questions, the information is available to them. They can also do one-on-one counseling. We support both types of counseling. Those are the details. Now, here's what I'm going to do. We're going to now go to the information that you have in your folder because, see, this is what I think is very important. Okay. Couple things here that I want to point out for you. Does anyone, if you look in your package there, it says Home Ready, Frequently Asked Questions. It's got a young lady reclining. And she's just kind of looks so comfortable. I wish I was that comfortable with right now. No socks on or anything, feeding the pup. This is a tool for realtors. This is marketing material. One of the things that Fannie Mae did in rolling out Home Ready is we created marketable material that you could customize with your name, your phone number, your information. We wanted to make sure that you had the ability to talk about the program. So this is there available to you. And you'll see it. It talks your name, your business, your phone here. There are actually 2 samples of that information there. It was on the table to the right. Got it? All right. Well, if you don't have it, we will make sure that you get it. Yes. And see, also, there's a larger one. I placed 2 over there. There's a larger one with a woman reclining. If you know it, all you need to go is to go to fanniemae.com, look for tools and resources, and you can have the ability to actually co-brand this. You can leave it at the listing. You can share it with your families and anyone that you're talking to who may be a future client. Non-borrower occupant income flexibility. Couple things that I want to point out, and I've been told I've got just a few minutes. When we talked about non-borrower co-occupant flexibility, this is a new slide that frankly came out within the last few weeks. I printed this 2 days ago. This explains how that income is used. A millennial couple is buying their first home, and the mother would like to help. She is willing and able to be a borrower on the mortgage, but she will not live in the home. This talks about how that can be used as a compensating factor. Please go and take a look at that information. I think that will be very, very helpful. Also, rental and boarder income flexibilities. If you don't have that sheet, and I brought a lot of those with me today, I want to make sure you have that. So, for example, you've got someone, my niece is a great example. She's buying her first home. She's got the money to buy, she can afford the home, but she's going to be renting out her room. She and her roommate that she's been living with for the past 12 months, she's going to move into the home that my niece is going to buy. I'm going to be able to, my niece will be able to use that rental income from that boarder to help her qualify for the home. That boarder is not going to be on the mortgage. Now, what coincides and what supports that? The last document, you will look. Make sure if you didn't get it, I want to make sure you have this with you. Home Ready, non-borrower, household income worksheet. On that worksheet, and I'll read it very quickly, here's what it says. I certify that I intend to occupy the above referenced subject property for a minimum of 12 months. So that boarder then states, I'm going to be living there for at least 12 months to help. The last one we have here for you is, I talked about how do you know if that borrower, for example, is buying in a census tract area and if it's eligible. Well, there is a census tract map there, and let me pull mine out for you. And these are all of your critical tools. But there is one that says Geomapping. Do you have that one? Okay, I'll make sure that you get that one. The Geomapping, for example, allows you to put in the address of the property so that you can then, for example, determine if the borrower qualifies. But let me give you just a little bit of information about California. Over 35% of the census tracts in California, there are no income limits. For example, 44% are within 100% high minority designated impacted areas, and another 25% of those are within the 80%. So there are a lot of areas in California where borrowers will be eligible for this program. Now lastly, and what I want to talk about is just briefly, what do you do with borrowers, for example, that are wanting to buy that may have had a foreclosure or a short sale in the past? One of the things that I'm going to be doing after the event is I'm going to be forwarding a copy of a document that will be able to allow you information regarding the parameters on borrowers. Just because the borrower had a short sale, a foreclosure, a divorce, that does not mean that they are automatically ineligible for Home Ready. For example, there are a number of waiting periods. We have designed and reduced those waiting periods. In the past, if a person had a bankruptcy, they had to wait 4 years to buy a home. Now, under extenuating circumstances, they can buy within 2 years. If it's a 13, it now with extenuating circumstances too. If, for example, they file multiple bankruptcies, and you know, when borrowers were threatened with losing their homes, they filed multiple bankruptcies oftentimes, that under extenuation circumstances can go down to 3. If you have someone, for example, that has questions, they are divorced, however, the spouse was able to retain the home, how would that affect them qualifying for a mortgage? How does that mortgage can be written? If they're looking at Home Ready, those things that we can certainly answer, but there are also going to be trainings. I will share that information.